There have been recent stock market crash 2020 predictions. What this video will go over is the possibility that the stock market will crash further in 2020 and also President Trump's effect on the stock market. One thing's for sure, if the stock market does crash further, it definitely won't be a Trump stock market crash. The Trump administration is doing everything they can to have the wonderful, most beautiful stock market under Trump that they possibly can. At its low last week, the SPY ETF, which tracks the overall market, dropped to 248, down over 90 points from its high of 339. Bond yields are at an all-time low and markets are losing liquidity. Even some of the biggest companies in America, like Amazon, have reported infected workers. Cruise lines have all but been decimated from the recent travel restrictions. Working parents and families are also feeling the effects as sudden school closures are causing them to scramble to find someone to look after their children while they work. Trump recently had this to say about the market and the Federal Reserve.
It's been a hallmark of your presidency. You're always going after the Fed. If you feel so strongly about it, why don't you dismiss the chairman, or do you think you're powerless to do so?
No, I think I have the right to do that, or the right to remove him as chairman. He has so far made a lot of bad decisions, in my opinion. We had this great, and we will soon have again, because I think you're going to have a tremendous bounce when this is over. I think there's a pent-up bounce that's going to be tremendous. I think you saw that yesterday with the stock market. Now, I'm not happy with the Fed because I think that they're following, not leading. We should be leading. I'm not happy because if you look at the central banks of other central banks, largely they're lower than us, their rate. We have the #1 currency in the world by a factor of many times, as you know. We have the currency, we have the power, we have by far the strong currency. Also, you look at the dollar, the strength of the dollar. Our Fed is not doing what they should be doing.
On Thursday, March 12th, the Federal Reserve Bank of New York announced that it would offer $1.5 trillion in short-term loans to banks to address, quote, highly unusual disruptions in Treasury financing markets associated with the outbreak. $500 billion on Thursday, March 12th, $1 trillion in 2 batches on Friday, March 13th, and another $500 billion on each week for the rest of the month. Now, this did seem to have a positive effect on the market. A multifaceted analysis will show that this was one of the main contributing factors to the market's 9% recovery on Friday the 13th. The S&P was up 9.3%, the Dow jumped 9.4%, and the Nasdaq jumped 9.3%. Also, Trump's announcement of buying oil to fill the National Reserve sent West Texas Intermediate crude up more than 7%. The market is clearly being propped up by monetary policy. With the upcoming election this year in 2020, the Trump administration is going to do anything that they can to have the strongest, most powerful market going into that election. However, they can only infuse so much money into the market. Looking at the stock chart in the S&P 500, one level to look at in the SPY ETF is 243 right here. That's a spot with very strong support where if the market falls, we will definitely see an increase in trading volume and people buying up the SPY. Strong support points like this make people feel as if the market is at a discount. When you look at stock market crash 2020 predictions, I do think we'll see a bounce here. When we look back at 2008, all the way back here, we lost about 50% of its overall value, but that was over 300 days. We've lost 90 points in about 2 weeks. There's a lot further that this can go because of the length of the run. So by no means do I believe that the market will not break 240 here. I actually do. I see it breaking below 200. That might sound extreme, but look back at just February of 2016 when the market was at 180. That's only 4 years ago. And that's before we started on this absolutely massive historical bull run. A post by Wall Street Bets Oddest, Hi Sup Bye Hello, read as follows. The US is on track to become the next Italy in terms of sickness cases. I can't say the word because YouTube is censoring that right now. Too long, didn't read. SPY 250 puts, April 17 expiration. After plotting the US, Italy, and Iran illness case data and evaluating the US's direction, it is clear that we are on track to become the next Italy. In fact, the US is actually set to have an outbreak worse than Italy, as the exponential multiplier on the US cases is far higher than Italy's back when they had as many cases as the US. The United States exponential multiplier currently hovers around 1.3, whereas Italy, at the time the country had the exact same cases as the US, had an exponential multiplier hovering around 1.2. So what do these numbers all mean? Load into those puts and hold through with them diamond hands. Make sure to subscribe to this channel, and thank you for 160 subscribers in the first 3 weeks of posting.